Why you will probably lose money trading options.
I want to address an error made by Patrick Boyle, who, other than this oversight, I generally have tremendous respect for. In a recent video, Patrick portrayed me as being shorter than Tony Robbins. Tony Robbins is 6'7". I'm 6'10", 6'11" with hair. Patrick,
Okay, let's get to the point here. That's shut up.
please, we traded options for a while. In British Columbia, incredibly turned $88,000 into $415 million between 2019 and 2021. But by 2022, his account was worthless. He's suing RBC and an accounting firm for not
Whoa, hold on. 88,000 to 415 million and then back to zero.
having given him better financial planning advice. That lawsuit is not what I want to talk about, but I will mention that caution is always warranted when taking financial advice from a bank. Banks will sell you bank financial products. What I
And don't listen to any random guy on the internet like myself.
want to talk about is retail options trading, also known in some circles as degenerate gambling. I'm Ben Felix, portfolio manager at PWL Capital, and I'm going to tell you why trading options is a loser's game for most retail investors most of the time. Options are
And before he gets too deep, this is only an 8-minute video, so we have a lot to do today, so I thought I'd jump onto this one. I think he's right. I do mean that. I do think he's right, because I got suckered into the allure of selling options as if selling options was like the game-changing easy way to trade, which I just lost hand over fist constantly. 84% win rate, but I kept losing money all the time. And then buying options, if you don't know what you're doing, right? You can either have a leveraged investment like what we use, or YOLO lotto calls, lottery tickets. So I don't think he's wrong.
are financial contracts that give the option holder the right but not the obligation to buy or sell a set quantity or dollar value of an asset at a fixed price by a set date. They are useful tools for many reasons, and the technology and its underlying mathematics have arguably revolutionized the economy and changed the world. While they can be used for good, some of their features, like embedded leverage, make them a double-edged sword. They can just as easily be used for responsible risk management and hedging as they can be used for speculation and gambling. Unfortunately, the majority of retail activity in options markets looks a lot more like gambling. But that doesn't stop retail investors from trading options. If anything, it seems like the speculative nature of options trading is the reason that retail investors are active in these markets, and it's only been getting worse as online options trading platforms aggressively market option trading to retail investors. Some combination of commission-free trading, high profits for brokerages, financial influencers, easy online trading and gamification, and the meme stock phenomenon have come together to turn retail trading into a large part of the options market. There are incredible stories, like the RBC client, at least on the way up, and Roaring Kitty, the guy behind the GameStop saga, that make trading to extreme wealth seem possible. This is probably not a good thing. Experimental research suggests that when people observe successful traders, they increase their own risk-taking. That research
And since you watch me trade, that is a great point, right? As you're watching me trade, don't think that you can do what I do in the size that I do. I tell you guys all the time, don't trade the same size that I trade. Don't do anything that I do. Remember, all stocks are bad. And you're going to have losing trades every once in a while. Just part of the game.
placed participants into a trading environment with a starting amount of capital and allowed them to trade over 2 trading rounds. After the first round, participants in the experimental condition were shown the performance of the top 3 participants, while those in the control group were not. The authors find that traders exposed to their top performing peers tend to take more risk, trade more overall, and be less satisfied with their own results. The same thing happens online in real life. Successful traders post their wins for everyone to see, making it seem possible for everyone else watching. Social influence and comparison.
But do they post their losses? Do they actually put all their trades on YouTube, right? Do they actually show everything that they're doing, or do they only show the wins? Or do they manipulate screenshots, right? We've seen that. We've seen that a lot where and man, like there's whole channels dedicated to this, right? Where this person posts a screenshot and they're like, well, actually, you couldn't have done that because this or that and the other. The price at that time wasn't that, right? There's no possible way you could have made these trades, right? The fake gurus, right? The people who don't actually trade but want to sell you the dream, they get found out. Other people who have made 2,200 videos online, There's nothing to hide behind because I'm just as open book as possible. And I want you to be successful too, which is why I try and show you everything that I do every day.
Are likely part of the problem, but it doesn't help that retail-focused trading platforms promote options trading to their customers, often pretty aggressively. I've seen ads that make trading options sound easy, smooth, and smart in an effort to compel users onto an options trading platform. This is no mistake. Retail options trading is profitable for the brokerages facilitating it. Brokerages promote options trading to their customers as a way to boost profit potential, but I wonder whose profits they're really talking about. In reality, retail options traders have lit huge amounts of their own money on fire by trading options. For example, a 2023 paper in the Journal of Finance estimates that the aggregate portfolio of retail investors lost $2.1 billion from November 2019 to June 2021. This finding is not unique or unexpected. A 2022 paper simulates returns from an empirical distribution of option trades and compares them to stock trades. The authors find that returns on options trades have considerably higher volatility and are extremely skewed with some very rare but incredible outcomes, like the examples I mentioned earlier. But the majority, over 75% of options trades,
Dude, look at this chart, right? It looks like a bell curve if you ignore this dude. If you ignore this candle right over here, which is the majority of everybody who loses.
lose money, and over half of the option portfolios in the simulation lose more than 90% of their value. This is the reality. It's kind of like a lottery. There are a few big winners, but the vast majority of retail options traders and the average retail options trader loses money. Another study on 68,000 trading accounts and more than 8 million trades in stocks and options at a large online broker in the Netherlands similarly finds that most investors take significant losses on their options trades, much larger than the losses they take from equity trading. The authors also demonstrate that retail investors do not use options for hedging their underlying stock positions, and that single men with low incomes and little investment experience trade the most. Together, this suggests that gambling and sensation seeking, rather than hedging, are why people are trading options. Guys,
That I totally believe. I totally believe. And that's why I try and talk about the trading psychology as much as I do, because I think a lot of people come onto my channel, other channels with the idea of, oh, I'm going to take this $5,000 account and turn it 5 million by the end of the year. I had somebody leave a YouTube comment because I'm up 56% before we have to close this trade, right? And it's not going to be 56% anymore. It's just part of the game. And they were like, 56% isn't all that much, really. You know what? I guess if you're YOLOing into everything and you've got millions and millions of percents return for the year, you're right, it's not much. But for a real trader, right, somebody who does this for a living, somebody who has plenty of wealth, right, I'm not YOLOing into anything. No way. I love my money way too much. I don't want to see it evaporate. And a lot of those people, it's Lambos or food stamps. That's why we like to do that, right? Because it's either going to go to the moon, I'm going to buy all the Lambos, or it's going to zero. You don't have to be in that boat, right? You can make investments using options, but you have to understand the risk, right? Peter says 2 words: study and discipline. Yeah.
get a less expensive hobby. Go outside. In case there was any doubt that options trading is being treated like a casino by retail investors, a 2023 paper in the Journal of Finance finds that 50% of retail trades in their sample are in risky options with less than a week to expiration, with an average quoted bid-ask spread of 12.6%, and they lose money on average. Retail investors in their sample strongly prefer call options to puts. They trade mostly at the money or slightly out of the money options, which have especially high trading costs, with an average.
Those are what I'm talking about. In fact, when I talk about where's that slide real quick? When here, the at the money / out of the money, those are the YOLO options, right? Those are the lotto tickets versus leveraged investments. Big difference, huge difference. And this is where I live, in the money.
Quoted bid-ask spread of 29%. They typically trade small amounts, and they prefer options on attention-grabbing stocks. They also document that retail activity in both call and put purchases increases significantly during retail investor frenzies like GameStop and other meme stocks. The authors again suggest that this is evidence of retail investors having speculative rather than hedging motives behind their trades. A 12.6% or 29% bid-ask spread is a very high transaction cost to overcome.
And that is one of the things I talk about when I look to put on trades, right? Trying to minimize this bid ask spread. And we talk about that quite a lot, in fact. 29% is huge. And that's the difference between buying it and then selling it back, right? In this case, this is 20 cents. 20 cents over 410 is how much? 20 divided by 410. I mean, that's still 5% between the bid and the ask. Yeah, that is a real thing. And one thing that whenever I'm looking to trade, I'm looking to minimize. And we go through that every single day we put on a trade.
But the high cost of retail options trading will not always be obvious to the retail trader. Brokerages promote zero or low commissions on their options trades, but those explicit costs are only one component of the cost of trading. A 2022 study using a dataset from the NASDAQ stock market finds that retail investors display three wealth-depleting behaviors when trading options. They overpay for options relative to realized volatility, they incur enormous bid-ask spreads, and they sluggishly respond to announcements. These behaviors translate to losses of 5 to 9% on average and 10 to 14% for high expected volatility announcements. A 2021 study on the South Korean options market shows that retail investors generally prefer simple option strategies which provide directional exposure to the underlying asset, and they tend to lose on their trades. Even the top 30% of retail investors lose money in the options market in the South Korean sample. Options trading platforms have more recently started offering complex multi-leg options. A 2023 study finds that retail trades in complex options return negative 16.4% over 3 days on average, with losses increasing with complexity. The findings suggest that retail investors may not fully understand the risk-return trade-offs in complex option strategies, and that they're lured in by leverage and the potential for lottery-like payoffs. Despite some incredible success stories, which we should expect in the distribution of options trading outcomes, trading options has generally been a disaster for retail investors, which we should also expect. Retail investors typically use options for speculative trading, pay high transaction costs, and lose money. All of these negative effects are amplified when investors are shown a successful trader's outcome, which in the world of social media is pretty easy to find, even when in reality, most people are losing money. I think it's also problematic that maybe other than this video, you wouldn't hear any of this if you tried to learn about trading options on YouTube. Most of the videos I could find are telling you how to trade options, how much money you can make trading options, and how to sign up for their course.
Totally agree. And this is why yours truly puts everything out on YouTube. Everything that I put on for years, right? Because there is a reality to trading. Right? You will win, you will lose. You get to decide how big your wins are by when you exit. But do you know when to exit? Do you have a plan on when you're going to exit? Probably not. Most people don't. I mean, you watching this, you obviously do. You're an outlier. And because you're an outlier, you have an understanding of where to get out, right? But most people have no idea. So they'll watch a trade go up and hold it all the way back down and say, what happened? Because they didn't know what to do. And they probably traded too big as well. Position sizing is key. It's critical. And it's not just about, getting into a trade and watching it go down. It's the emotional aspect of money, right? The energy behind, oh man, I cannot believe I did this to myself. And then you go into a spiral, right? And then you maybe a revenge trade, and then everything that you want to do, you have messed up because you've put yourself in a bad position. But if you listen to what people are talking about, who actually know what they're doing, like we talk about here, then you can be successful trading. Have to be, right? Like Stocky Locky says, I love being a outlier zero motion, and I bloody love it when it tries to creep in. Yeah, there is no motion. You can drive to Dallas to Disney, from Dallas to Disney World the entire way because you have a map. But if you don't have a map, how are you going to get there? How are you going to go get your picture with Mickey Mouse if you don't know which way you're going?
I'd bet that most of the people behind those videos have not read the papers showing how poorly trading options tends to perform for retail investors. Just take a minute to think about it. Financial markets are highly competitive. Retail investors do not have the same resources, information, or knowledge as institutions, and they're more prone to behavioral biases. When you trade, you're interacting with sophisticated market participants who want to make profits at your expense. Based on the research mentioned in this video, the options market seems to be one of the worst places for retail investors to trade and one of the best places for institutions to profit off of retail investors. Always remember, when you're having dinner with lions, make sure you're at the table, not on the menu. For most investors, building wealth is not something that happens with one big winning trade or even with a series of winning trades. It's a long and boring process that consists of saving and investing in a diversified, low-cost portfolio. Chasing big wins by trading options is more likely to destroy wealth than to create it. Thanks for watching. I'm Ben Felix.
Dude, for sure. I don't think he's wrong in anything about this. It's very doom and gloomy. But he's got a point, right? So many people on the YouTubes don't want to talk about the reality of trading. They don't put their trades out, and if they do put their trades out and it's a loser, they will delete the video. They'll act like it never happened. But you know what? You don't have to stress on that. You're in the right place. Like Stas is talking about here. Thanks to Chris. This is the first group where I see that over the whole trading I did here, started on May 9th, I see that I have positive expectancy and I tried all the complex strategies too. Yeah. Nico says, taking profit, closing a position that is going up is more difficult than cutting my losses short. Interesting. And reality doesn't sell to people. For sure. Right. At Outlier, we want to make money with you, not make money from you. Right. I mean, the cost of Outlier is literally 82 cents a day. It is not that much at all. But you know what? I'm just a random guy on the internet. Let me introduce myself as I go here. My name is Christopher Ewell. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. In fact, some of them, like Larry Hite, specifically worked with me on how to trade options in a leveraged investment manner, right? Working to make sure that you are putting the market in your favor when the market is working in your favor versus trying to go against the trends. You want to go with the trends and you want to pay as little extrinsic value as possible. All the cool stuff that we talk about every single day. I've been successfully trading since 2009, and this is where outliers like us save time, make money, and start winning with less risk together as a team. So go ahead and subscribe if you haven't already. Now, what I want to do is do our trading for the day, because we do need to make some trades. But first, let's go to today's member highlight. So over in our Discord, in the Share Your Big Wins section, you can see where I had saved the video over here. In the Share Your Big Wins section, we have so many people. Where is it at? We have so many people sharing what awesome weeks they've had, right? And Carol Catherine, of everybody, I am most impressed by, of course, she's made 1,000% profit after this year, dude, right? And she says, Chris mentioned to take partial profits and reduce risk over time. That pretty much sums up what I learned and applied to Outlier 3.0 and the Outlier 9. So how cool is that? Outstanding work, Carol. And do me a favor, as you're watching this video, if you're watching this live or on the replay, tell me some of your success stories in the chat. I would love to share those for you. And of course, the way that you can pay me back is by telling everybody you know about Outlier, because the first rule of Outlier, you just tell everybody you know. And of course, you hit the like button. So let's get back to trading in the Outlier trading room. Now, before we jump into it real quick, what is Outlier and how does it work? Well, old Uncle Warren used to say, be fearful when others are greedy and greedy when others are fearful. Outlier shows you if investors are acting irrationally fearful or greedy and by how much, allowing you to get in the stock before the Outlier move happens. And if you're ready to save time, make money, and start winning with less risk, it takes just 3 easy steps. Step 1, grab the annual pass over outlier.com for just 82 cents a day. Or if you're on the monthly plan, you can upgrade with one single click and save 64% off the regular monthly price. Step 2, start using the Outlier 9 that we're going to go through here in just a minute and sit back and relax. That's step 3, because you just found the easiest way to save time, make money, and start winning with less risk. Now, my style of trading using Outlier is called the golden ticket trading strategy. And I'll be the first to tell you, we will be renaming this shortly. We had a meeting here, an Outlier meeting just a little bit ago, talking about some enhancements that we're making here in the near future. And one thing that we want to do is rebrand this and put it more on brand with Outlier. So I'm just letting you know ahead of time, we're going to rename it soon. But it starts with what the market is telling us. Now, here's the cool part. I have gone through and I have updated the golden ticket trading strategy PowerPoint here on Google Drive. If you are in our Discord, I actually dropped the link for you earlier today over in the general chat. Let me see here real quick. Right here. Now, this is the same link that you've had before if you've saved it. And I went through and I updated all the slides today because what I wanted to do is get it more in line with the Outlier 9. So it's a little bit, it flows a little bit easier. It makes a little bit more sense. And one thing that I did was I wanted to make it where we can basically point to certain spots, right? So up in the corner, each time I go through these slides, you're going to see different numbering conventions. So number 1, 2, 3, 4, 5, and then 1-1, 1-2, etc. So what is the market telling us? Well, the Outlier 9 wants us to focus on the market first. So like I say, all of this is out there on the Google slide that I've already shared with you. So be sure that you are following along with this. The Outlier slingshot, kind of like that. I kind of like that. I mean, I've already wrote it down. Might as well just make it all the way, right? So we want to first focus on the market, get the trend, the signal, and the breadth. So first, let's look at the trend of the market. We want to look at the SPY with the 10/20 price over the 50. And let's go to the SPY here. And the SPY is up quite a bit today. We're running into that order block, but still up quite a bit today. Up 81 basis points or so right now. And we have the 10/20 price over the 50. So the SPY definitely has a bullish trend right here for sure. Next, we want to look at the signal of the market. So we want to see the buy or sell signal of the SPY in outlier. So let's jump over to outlier. Let's jump over to the watch list because that's where I have the SPY saved. And we are still sitting on a sell signal as of today. So the last part of the market is the breadth. Now, I did make this a little bit simpler. So just basically, if it's crossing over the 10 EMA, this is a bullish cross, this is a bearish cross, this is a bullish cross. And then all of my exceptions, because I do have some exceptions on breadth, are right here. But we're not going to worry about those exceptions today because the market is definitely crossed down bearishly on breadth. Let's go over to that real quick and zoom over. And we can see right here, this breadth crossed over a few days ago. So we have, what do we have? We have bullish trend, bearish signal, bearish breadth. Now for me, this means I will not be putting on any new trades. The only thing I'll be doing is holding or taking off trades. So the next step is to look at exits. This is now section 2, sections 2.1. The first thing we do before putting on any new trades is to reduce risk, okay? So, of course, we want to make sure that we understand before we put on a trade, we go through this, right? There are no expectations on the outcome of the trade. I do not know how much money I will make. I know exactly where I'm going to get out, and that is by limiting my risk. I have no profit targets on the trade. I just have a plan to get out when one of my exit signals is hit. Now, I did expand the exit signals in this. So in 2.4, we can see market exits, chart exits, and outlier exits. So by breaking those down, I'm trying to make them a little bit easier to follow along. So first, the SPY closing under the 20 EMA, that's not going to happen today. Close a couple tabs here. SPY is definitely not going to close under the 20 EMA. There was a chance this morning, but not right now. Sector and market breadth have not crossed over in the energy sector, which is the only stock that I have on right now. The energy sector is still technically bullish. So we're going to leave that. Let's go to the next spot, chart exits. So this is where I need to get out. So I'm rolling, or not rolling, but I'm holding RRC, and RRC's got a really ugly candle right here. Really, really ugly. We bought it on Friday the 13th. It went up. I didn't have any exit signals this entire way, and today I certainly have an exit signal. What is my exit signal here? First, it's a close below the prior day's low. After I roll, it's a close below the prior day's low right here, like that. Also, the half ATR from entry on the roll has also been breached. So there is no way I will be holding this. You could not make me hold this. Not a chance. So I need to go close RRC. Now, I feel like this is making it a bit easier, right? We can say, okay, any market reasons to exit? No. Any chart reasons to exit? Yes, in this case. And then if there weren't any outlier reasons to exit, outlier signals. So let me know in the chat if this is making sense. So yeah, we definitely need to get out of RRC. So let's go into Tradier. And someone had a question earlier, what the difference would have been if we had held the 38s, because we actually had rolled up from the 38 to the 39. So we're going to do some math behind this as well to show you, in my opinion. I haven't done the math, so I don't know if this will actually play out in my favor, but I think it will. So the original trade was a $4.20 debit when we bought the 38s. Let me get all my notes up here. Yeah, $4.20 debit. So I'm going to make that a negative because we paid $4.20 to enter the trade. Then we rolled from the 38 to the 39. And that we took in a credit of 75 cents. So we're going to make that positive. Okay. Now, when we close the 39, this will tell us how much it was worth when we do this. So let's go close the 39. So we're closing the 39. You can see that spread is only 10 cents wide. So let me see where I can get filled to close. So we're closing the entire position. Close position, full position. I'll try 305. Filled at 305. So I'm out in one account. Let me close the other account. So I manage family money now. This is fun. That one has not been filled at 305. There it goes. Filled at 305. So I'm totally out. I'm out of the market 100% right now. Out of the market. So we closed it at a positive 305. Okay. So small loss on the trade, it looks like. So let's do the total here. Equals sum. Right. I lost 40 cents on the trade. Right. No big deal. what minuscule amount I lost in that trade, unfortunately. So let's say that we kept the 420. I'm sorry, we kept the 39. We didn't get anything for the roll. Let's see what the 39 is valued at right now. The 39 is valued at 38, I should say. 38 is valued at 385. 380. Okay, 380. So what is our total there? Roughly the same. Roughly the same. There might be a couple pennies here and there, but this is what it looked like because I rolled the trade. This is what it looked like today, right? I took in partial profits to do this. And normally this ends up being a little bit better, but that's all right. No stress here. Just curious. I didn't know what a difference it would make. So yeah, there you go. Somebody had to ask that question, so I did it right now. So let me close this. Let me go into Discord and drop in that we close those trades. Let's see, Outlier Trading Room. And then let me reply to the RRC where I opened, or last time I rolled it here. That's where I rolled it. Let me copy something real quick. Close. Okay. And reply. So look at this. As transparent as one could possibly be. 623. Trade number 1 closed. RRC. This was, which strike was that? That was the July 18th 39s. 18th 39s. Or where did it get filled at? So it was 305, wasn't it? Yeah, 305. 305. And the reason that I closed it was it close under half ATR from roll. Now, I do want to showcase something real quick after I put this in, because I know it's going to be a tiny loss, and it is what it is. So 305. Okay, so for me, that was a 9% loss. All right, barely anything. 9.62% loss. My gains for the year are sitting at 40.82%. Let me do this. Loss. And on my account, that was a, what impact was that? Negative 2.53%. Now, you're probably like, wait a minute, Chris, I thought you were saying you're at 56%. Right, and that included the open profits. But when the open profits went away, that's part of the game, negative 2.53% account impact. So I just had a loss on the trade, and yet I'm going to have 97.5% of my account. 97.5% of my account is still there. Right? Is what it is. Just part of the game. That loss was entirely too small. That loss was entirely too small. If I, yeah, that's it. That's going to put me at 40.82%, right? So I had some gains. The gains went away, and now I've got a little bit of loss from that trade, but that's okay. I'm still up 40.82% for the year. Not bad. So let's continue on. I want to showcase the rest of the PowerPoint here. Yeah, it's pretty great. Hey, Augie did better. Augie did better. 3.10, outstanding. Random guy likes the new slides. Albertone likes the transparency. It was 2.3 or 2.53% is what it is. All good. No stress there. So those are the exit signals for the bullish market here, bull market, and then bear market. I broke into a different set of slides, so it's a little bit easier to follow if you're long or if you're short. Then we go from what the market's telling us to what the sector is telling us, right? That makes it a little easier. Section 3. In section 3, right, we would be looking only if all of this is green, would be moving on to the next step. So let's go ahead and do it together just for fun. So note which sectors have bullish and bearish breadth. So if we jump back in outlier and we go to breadth, we can see only the energy sector has bullish breadth. Okay, that's it. That's it. And that makes it a little bit easier because the next step we go into our screener and we're going to filter it down for just the bullish sector breadth, bullish sector's breadth. So if we go to the screener, I feel like this is an easier way to walk through. We didn't change anything. There's no rules being changed. Just a little bit of the order of the rules has changed. Make it a little bit easier to read. So we're going to apply my bullish template. And that looks like this. Bullish sector breadth, positive backtest, 1 million shares, average daily volume, buy signal, all market caps greater than $20, heat map 0 to 90. The heat, so this is the fear and greed. The fear and greed's moving up with a green overlay, meaning 10 over 20, price over 50. So we got the energy sector, and then we hit apply filter. Like, it's just that simple. It's really not that hard to do this. So the next step is pick one stock from each sector, if there is more than one, and review the sector to make sure that greed is increasing. So let's say that we had more than one sector, right? Just pop this open and you can look at it and you can say, okay, for this sector, does the fear and greed show that it's rising? I know that this is only one, but we're going to look at it here. Yeah, we can see the sector fear and greed is rising. Sector breadth has pulled back in, but hasn't crossed back over just yet. So sector breadth, still bullish, and the sector fear and greed is still rising. Now, if we had more than one, I would say review for sector greed increasing in a bull market, eliminate any sectors that don't match this criteria, and then rerun the scanner. We don't have to do that now. But that would leave us with the market being fully green and then the sector being fully green. So then we work on the stocks. And so we go to the next section, section 4. What are the stocks telling us, right? We're letting the market tell us which direction it's going. We're letting the market, we're letting the sectors, we're letting the stocks tell us, okay? Here we go. So then we look at the trend, the signal, the fear and greed, and the outlier blocks. So the stocks that are left are the best stocks in the market as of today. So I look at the buy signals from today and yesterday only today and only yesterday. So by default, they're filtered by start date. So this is the 23rd. So I don't have any new ones today. But let's just say, for example, these two were a today and a yesterday signal. Okay, let's just, for example, use that. Next is review the charts. So on the charts, we want to make sure there's no outlier blocks in the way, no earnings the next 3 days, the price is above the 10, and that's above the prior day's low. And you start with the highest back test and work your way down. Right, there could be days where you have many, right? Could be 30, could be 50, I don't know. But you start with the highest back test and work your way down. So if we're only focusing on these two here for our example, I would look at SEI, right? So 357% outlier return versus 45% outlier return. Let's go to SEI's chart. Okay, so one thing we'll notice right here is this is under the 10 EMA. Okay, so I would not trade this because the 10 EMA is one of my exit points. You are not allowed, listen to this, Chris is going to give you a rule you're not allowed to ever break. If this is your exit point, you are not allowed to put on a stock that is already past your exit point. That is insanity to me. Because how can you justify putting on a trade if it's already past the point that you'd be getting out? I don't know. You tell me, because I wouldn't be doing that. So that's why I have that rule to double check the charts first, review the charts first, start with your highest back test and work your way down, which that's why that rule is right there. Zeke says, yeah, it was a successful trade because you followed your plan. And Zeke, you can tell right now, right? I'm really bothered by this. Oh, this loss is killing me, right? No, it's what it is. We don't know where we're going to get out. We just know that one of our exit signals will be hit and get out of the way. Joe had a question. Does annualized return consider calendar year or rolling 12 months? So that would be calendar year annualized return. Let's jump over to that real quick for Joe's question. So it is June 23rd right now. I'm up 40% this year. My annualized return would be for the rest of the year. I don't know where it's going to end up, but that's where it's at right now. All right, so back over to this. Great question, Joe. Here. So SEI, which was the first one on our board here. So that here. SEI, the first one on our board here. I would not trade because of that. Let's go to EXE. EXE. Let's go review EXE chart. Ah, here we go. It's over at 10/20/50. All that looks good. No outlier blocks are in the way. No earnings in the next 3 days. Double check. No, none of that's there. Price is above the 10. It's above the prior day's low. Okay, so let's go to the next step. That would be looking at the options chain right here. Now, start with the highest back test, work our way down. We did that. Confirm OVTLYR Nine is 100% set up. We did that, right? We're using examples here. We know this is not true. The trend would have been set up. The market would have been set up. The sector set up. And then the stock would have been set up as well. In fact, let's go to EXE. Take a look at it. And we can see here, right, the sector moving up, the stocks, fear and greed moving up, a buy signal, 10/20, price over 50. The breadth has come down, but it's not quite crossed over just yet. So in reality, this is all green, but these are not there anymore. I'm sorry. No. Fear and greed is there. Breadth is there, but the signal and the breadth of the market are not there. So that's what we got to see. Now, the next slide I put on here is only proceed if OVTLYR Nine is set up, right? Only proceed at this point if you know for sure that the OVTLYR Nine is set up. And then, of course, another rehash of our trading psychology. And then lastly is getting your position sizing. Your position sizing is going to be different than mine, right? Mine is going to be different from the next person's. You need to make sure you get the right position sizing. So that would get you through all the trades, right? That would get you through 90% of everything we got to do. Every once in a while, we might have to roll a trade. And that's what these directions are for. We might have to roll out a trade because we get too close to expiration. And then we might have to close a trade because of earnings, but I've put all those on the slides up here for you. And then I also put in the emergency exits. Now I'll jump over here into the Google Slides version so you can have it as well. These are the emergency exits. Now, if you ever want to know, this is called the planned exit point. Granted, remember, as we look at this, we're not looking at this at the very last moment of the day to make the decision. We're looking at in the last 30, 45 minutes of the day. So there's a chance that something can go haywire before the end of the day, right? Something can happen after we've looked at it. And so that's why we have these exit signals here. And that's why I call it a planned exit point, right? If you're looking at the chart and you say, oh, you know what? It's not got the 10 EMA broken. I'm fine. And then the last 30 minutes or so that breaks through without you knowing, the next day, you need to be making sure you follow your emergency exit point. Okay, your emergency exit point. And then the other one is running into order blocks. So that's what I wanted to show you. I was super stoked to be able to go through this. And now we've got slide numbers on here. So you can say, hey, if you're talking about it, if you're trying to reference something, you can say, okay, I know Chris has this rule on 4-7. What is 4-7? And you scroll up and you're like, okay, 4-7 is only proceed if the OVTLYR 9 is set up. There you go. That's what I would say. So listen, at this point, I am completely back to cash. I'm going to go fill up every bit of sgov that I can buy in the process and just be ready for the next trades. When will the next trades come along? I'm not 100% sure. If we take a look back at the plan, right? Go back to SPY. We do have a bullish trend, but the breadth is pretty weak right here. Let's go back over to breadth. Great idea by Rick. I don't know what Rick's idea was. Maybe it's what I mentioned earlier. Let's go over here. So I don't know when we're going to get these breadth crossovers back up, right? We got the stocks. I'm sorry, we got the market on bearish breadth alert right here. We've got most of the sectors on bearish breadth alert. So yeah, it's got a lot of issues to overcome before we're looking to put on any new trades, right? So if somebody's out there telling you now's the best time to buy, I'm not buying anything. I wouldn't be buying anything even if I had your money to go buy it with. Let's answer a couple of questions here. Rick asks, would you make sure you wait for the last 10 minutes on days where there are lots of options expiring? I mean, it's really all about your lifestyle, right? I mean, if you can wait till the end of the day, by all means do. I like to do it in the last 30 minutes or so, and that's what I did. It just works with me, works with my schedule, and I know that that's what I want to see is waiting until the end of the day. And in fact, let's go back over to RRC real quick, right? I got out, and it's continuing to push down, is what it is. But in all reality, I could have got out this morning. I could have got out this morning with an even greater gain than yesterday. But that wasn't part of my plan. And so I have no regrets. No regrets at all. That is what it is. Susan asks, would you short the Qs with call credit spreads? No, never, ever in the history of time will I ever sell options ever again. No. Susan, I'm glad you're here. You must not have been here for a while, because that is one of my huge, giant pet peeves is selling spreads or buying spreads or anything to do with spreads. Any sort of anything that's not a deep in the money call or deep in the money put, I don't want it. I don't want it at all. I could go on for days and days and days about how it's awful. But I won't bore y'all with that. Shoy says, what does YOLO mean? It means you only live once, man. You gotta go crazy. You gotta go crazy. Michael Ross, the boss, gotta give you another A on your plan. Oh, thank you, my friend. It's because of you. You inspired me, my friend. So Squatos has a question. What about stocks at 52-week highs? So 52-week highs is actually super bullish. The reason being is that everybody who's bought it in last year, they're happy. Everybody who's bought it in the last year is stoked, right? Buying begets buying, selling begets selling. Everybody who's bought it in the last year is super stoked. So they want to go tell their friends who are going to go buy more, and then it's going to push higher and higher, right? So 52-week highs is an actually really, really great thing. Let's see if I can answer any more questions for you guys real quick. I really love being able to hang out with you guys. I missed you all last week. And then next week, I'm going to be out. Actually, let's go ahead and get that out of the way. I'll be out from the 2nd of July until the 8th. We're going to take a little vacation, and that'll be the last one for the summer. Yeah, the last thing I want to do is trade the wheel. So for those of you who don't know, I have not spent a lot of time with the wheel, but I have an understanding of what it is. I believe you sell puts on whatever stock you want. Like, be a genius and sell puts all day long. And then once you've lost so much money that you now own those shares, because the only reason that you would have taken ownership of those shares is if you, hang on, this will be easier. Let's say, let's do HIMS as an example. HIMS is getting murdered today, so let's use that as an example. Let's say that you sold the HIMS 40 puts, right? And then through this whole time up here, you're collecting all of this incredible amount of money. Actually, no, it's a little bit lower than that. Let's do the 45s. You sold all these puts. You've made all of this. I'm being facetious here. All of this money by selling those puts. And then, boom, it collapses down on you. Now you are losing hand over fist. You cannot tell me. There is no possible way to tell me that you have made more money selling those puts than you just lost on this one move right here, okay? So you've lost your ass on these puts. And now that you own the stock at a huge loss, you sell cover calls against it. No. There is no possible way that I would ever do the wheel. But thanks for mentioning that, Soccer Mom. A cheese spread? Chris, make sure you post everyone. Oh, thank you, my friend. I forgot that. Let me go do that real quick. Edit here, and then I'll do at everyone. I forgot to do that. Thank you, Rick. There, now everybody's notified. How much is Outlier? Well, thanks for asking, Jeff El Toro. It's only 82 cents a day. Alua says, how is Advanced Money Destroyer looking today? Just curious. I don't know. Let's take a look. So what's crazy about this is that AMD had been in just free fall for months and months and months and months. It was in the most obvious bearish trend all the way down here. And look at this. On May 25th, all the moving averages crossed over. This was the outlier trend template flipping over. And then it's gone up crazy ball since then. How much has it gone up? It's gone up 30% since then. So don't tell me Chris doesn't know what he's talking about, right? I understand that AMD is up, but it's only back to what it was in December. So if you had bought in December, it took you 7 months to get back to break even. Or let's use a little red light, green light here. If you had waited until Chris said, hey, look, this is a bullish trend on AMD with a 10 over 20, price over 50, you would be up 30%, where the person who bought it in December is just now to break even. Isn't that crazy? That is the power of trend following. Now, you might make a buck or lose a buck, right? Like here, you might have made a buck or lose a buck right there. However, when you're in the trend and it runs, you can actually make some huge gains. Yeah, look at that. Let's see. Nate, good to see you, my friend. Let's go back to HIMS real quick. Oof, yeah. Here's a great example of why I do not trade inside of an outlier block. If I see an outlier block at all, that is a 100% disqualification. I will not trade this. And look at how smashed down it got. In fact, I believe we got a sell signal on HIMS as well. Yeah, I mean, right here, there's no possible way I would have bought this. So first off, the sector is getting more fearful. The sector has bearish breadth, meaning more sell signals than buy signals. The stock was getting less greedy, more fearful. And then it had, even though it was in a bullish trend right here, the noise would have also kept me out, because I would have looked at this and said, okay, I don't need to buy it, right? So That's the kind of stuff you need to look at, right? That's why the outlier 9 is there. It's not going to get you perfect entries, perfect exits every time, but it's going to get all the momentum in your favor to get that slingshot that you're looking for. And it didn't have it. It didn't have it. And it got absolutely wrecked, absolutely monkey hammered. But in the meantime, some people made some money. David says trend following is awesome. Yeah. First off, David, you're awesome. Second off, trend following is second best. Hey, let's all pay respects to David in the chat. Everybody type David in the chat because David is a rock star. Let's see. I'm not sticking up for selling puts, but you would roll it down and out. You wouldn't take that huge loss. No, I would have taken a huge loss because I didn't know what I was doing. And man, did I lose out. But then again, David, imagine rolling it out even further. Now, how long do I have to hold on to that trade to get back to break even, right? Let's make this even worse. Let's make this even worse. Yeah, it is. Selling options is the most insidious trade of all time. David, hey, another David. Do you ever pay attention to stocks that are looking for index inclusion, like Robinhood and the S&P 500, or when Palantir was rumored and subsequently added? Maybe add to the exceptions when not to trade. I don't know, dude. Like, I care more about price action than news. I don't even care about news. If the price action is working, if all the momentum is in your favor for the stock, by all means, follow that in your plan. But I would say, David, if that is something you pay attention to, add that to your plan. Write down the causality meaning like reason I get in, reason I get out, and make that a written plan versus just, oh, this may or may not do this thing, right? In fact, it would be difficult to quantify or to stratify the news on that. But dude, if that's something you care about, I would absolutely recommend adding that to your plan. Let's see. Oh, can you go over putting cash in escrow? Yeah, I need to go in cash and put escrow, actually. Thanks for reminding me. So the way that I do this is go to sgov, share my screen, is any extra cash that I have left over, I immediately invest all of it into sgov. Now, this is new. I'll be 100% transparent with you. This is something that I just started doing this month, and it has definitely paid off. But I need to buy more. Hang on. You go buy some sgov. Trade that. sgov, not the options, just the shares. So the way that I look at it is, let's say you've got a $10,000 account, right? Basically, as many shares as sgov as you can buy, that's what I'm buying right now. Reason being is that it's as liquid as cash, yet it pays a return. Actually, I need to shut up for a moment and do that. Hang tight real quick. Talk amongst yourselves real quick while I go buy some sgov. So I need to buy $48 million worth of it. Hang on. To buy 100. So sgov roughly trades at 100. So I need to buy a bunch more. Hold tight. I basically try and max it out. And if it says you don't have enough buying power, then I just go down by 1 until I've got the right amount. Hang on. sgov is currently trading at 100.62. Okay, I got it. What am I doing wrong here? Oh, okay. I don't have those amount of funds yet. Wait, no, I'm reading that wrong. Oh, I was putting okay, I'm sorry. Pardon me. I was putting my entire account into it again, which it's all there except for what I just sold out. So that's what the problem was. Okay. Okay, that made a difference. Okay. Yeah, I literally will have $10 in cash left at that point, because everything else is in sgov. That's how I do it. Okay, now I need to do the family account. Sorry, I know this is riveting to watch me type. cash do I have in my account? Oh. Sorry. I should have ended this video to do this part. I'm sorry. But I want to answer more of your questions here in a moment if you give me a second. Okay, there we go. Okay, so I'm filled. There we go. Okay, good to go. Okay, sorry. Apologies. Such is the life of a fund manager. Okay, let me see what I can do for you real quick. Ahmed is screaming. Can you explain this? I don't know, can I? Lurkophiliac says, I started doing spreads 2 to 3 months ago, and after a week, I could see it was just gambling. No more. Dude, yeah, spreads are, they're so insidious. Like, it feels like you're doing the right thing. But then when you lose, and you lose 6, 8, 10, 12 times as much as you can win, oh, yeah, it's brutal. Luke says, not sticking up for selling options either, but could you potentially use the outlier signals to give you an edge when selling? You could. You absolutely could. Right? Let's say if you had 8 out of 9, maybe you could sell some put spreads on it. There's no way I would touch that. But that's just me, right? You do you. If that works for your plan, go for it. Sakram, are you going to sell sgov on the 30th and buy back on the 1st? Yes, and I'll tell you exactly why. So our friend Dave Williams, shared this with me, and it's really brilliant. Because the reason that sgov goes up every day is this is the amount of interest that you're accumulating in these T-bills, and then it pays the dividend, and it goes down by the amount of the dividend. So your account is still growing. It just goes down by the amount of the dividend, right? So it repeats and has repeated as long as this has happened. But I want to point this one out right here. But there are times where it doesn't go, straight line up, straight line down. There are times where it actually goes a little bit lower or a little bit higher, right? And so you actually have the tiniest bit of market risk associated with that. And that's because this is trading on T-bills, and those do move, right? They do move. And so the way that I am going to avoid that tiniest bit of market risk is hold it throughout the month, take out what I need. When I'm done, put it back like I exactly just did a moment ago. And then on the last day of the month, close it at its peak, because we can actually see where that peak is at. You will get out on the top candle if you pay attention, go the last day of the month, and then you just buy back the next day when it's lower, right? And then at that point, you don't have any market risk because it goes up every day as the interest accumulates into your account. I think it's really cool, right? Because there will be a point in time, if you zoom out far enough, there will be a point in time where instead of it continuing to be flat, it'll actually go down, right? And it may actually go up, right? But I would assume that it would go down, right? Because we saw from 2022, when rates were lower, it go up like this during that time, right? So I imagine at some point it'll go down. And if you eliminate the market risk, it doesn't matter if it goes down. You'll still collect that each time. Daniel, that was my bad. I was putting my entire account into, or trying to, and it was like, you don't have enough money for this. I was like, wait, yeah, I do. I was like, no, you don't. It's like, oh, wait a minute. Okay, my bad. If outlier at some point in the future consistently starts to outperform your trading plan, we make changes to your trading plan. Oh yeah, of course. I am the first person who, well, probably not first person, but I will change my trading plan as needed, as often as needed. If something isn't working and I can identify and historically prove that I need to make a change, I will do so. There's no way I'll just sit on something and just let it go against me. No way. Could you have online coffee with Carol to reveal her secrets? Yeah, I'd love that. Do you look at the VIX at all? I don't. I really don't. There's probably some great ways that you could trade with or around the VIX. It's just not something I look at. But if that works for you, go with your plan. I believe it's the last day of the month, Brandon. Let's see. Are you buying sgov in Tradier? I mean, you can buy it in any platform. You can buy it in any platform. So can you explain sgov? So let's do this. Let's actually go to like CNBC or something, or Yahoo Finance. Let's get them to explain it. just going entirely too slow. No, I did not say Tesla. Did anybody see me say Tesla? I sure didn't say Tesla. I said sgov. Good gravy, that took far too long. Okay. The fund will invest at least 80% of its assets in the components securities of the underlying index and will invest at least 90% of its assets in the US Treasury securities that BFA, I don't know who BFA is, believes will help the fund track the underlying index. The index measures the performance of public obligations of the US Treasury that have a remaining maturity of less than or equal to 3 months. So this is 0 to 3 month Treasury bonds, right? And let's go to a yield curve chart. US Treasury yield curve. So basically what we're doing by investing in sgov is taking advantage of, so this is the 3 month point, taking advantage of this point of the curve. Now, what you see right here is not a normal interest rate curve where the 30 year is priced at 4.8, the 3 year is priced at 3.8, and the 3 month is priced at 4.4, right? This is not a normal curve here. A normal curve looks, where it's basically going up over time. We are taking advantage of this this upward skew over here on the short end of the curve by buying sgov. So it's actually really, really cool. Georgia says, I learned so much about this program. I didn't even know that what an options was, and I'm so thankful for the knowledge and team. And Chris, oh, Georgia, you're the best. I'm so grateful for you. Daniel says, can you explain why you couldn't put your recent sale into sgov? I thought that, oh, yeah. You're right. It was totally my bad. The key to trading options is trading long calls and deep in the money puts. Yes, you're exactly right. Don't have to worry about settlement dates after selling sgov. Well, if you have a margin account, you really won't have to run into that because margin accounts basically allow you to trade on, depending on the account, maybe 2, 3, 4, 8 times your margin or the amount that you deposited. So you shouldn't run into the availability of those funds. Nothing else matters. That's right. Johnny says, you can buy spreads on expensive stock to be able to trade it, but go for higher delta and treat it like calls. Dude, if that works for your plan, go for it. Go for it. Pay the taxes. Pay the taxes. Always pay the taxes, right? Too many people focus on, oh, I'm going to have to pay taxes. Yeah, you're right. Imagine if you got a raise at your job and you're like, well, I would love to make more money. That means I'd have to pay more taxes. So, you know what? I don't want that promotion. Screw that promotion. I'd rather have less money. No. I don't think you understand. You get to pay taxes when you're a badass trader who has made money. If you have not made money, then you do not have to pay taxes. I feel like it's a better thing to do to pay taxes. When will the market trend and breadth all turn to sell? I don't know. That's the thing, is we don't know, right? There's no reason to predict. Just be sure that you are following the data. Just following the data. No, you're not giving up the dividend on sgov, Gary. Great question. Let's go back over the sgov chart. You're not giving up the dividend because you're actually accumulating the dividend throughout the month. And then at the end of the month, it pays the dividend into your account. So you get extra cash in your account. But then the market value of the security of sgov actually drops by the amount of that dividend. So it's a complete wash. It's a complete wash. So you're not losing out on that. No state tax on sgov. Dude, I don't pay state taxes. I live in Texas. Yeah, I'd love to pay taxes on a few $1 million. Exactly. You know what? It says, how much does the sgov give in dividends? It's basically what the treasury curve is paying. Get out of my way. Basically what the treasury curve is paying with 1 month, right? So this is, let's use this point right here. 4.38% is the annual yield. You're earning roughly that in the course of 1 month divided by 12. Right, it's not going to be 4% for the month. A lot of people get confused by that. It's 4.38% divided by 12. That's what your dividend would be over the month. All right, that's going to wrap it today. We went extra long, but you know what? That is part of the trading room. Thanks so much for coming today. Really appreciate you, and I will see you tomorrow morning. Talk soon.